So from its highs, Tesla stock is currently down about 25% at the time of this recording. And that begs the question, is now the perfect time to start buying this stock? Well, as someone who already owns the stock and it is my second largest position in my entire portfolio, I might be a little biased in saying this, but I am bullish long term on Tesla, and I do also think that buying on big dips does make sense. So in today's video, we're gonna take a closer look at the stock, talk about why it's been falling, and I'll give you the exact reasons on why I think it's going to recover big time over the long term. And as always, of course, I'll let you know if I plan to buy any more of this stock myself as it continues to drop here. Again, though, this is just my opinion and what I'm doing myself, so please don't copy me, do your own research and make your own decisions. But this is going to be a fun video because I've definitely put together some super interesting things to cover in today's video. If you're a Tesla shareholder or if you're even thinking about buying Tesla stock, you definitely want to watch this video. I hope you guys enjoyed. Hit the like button if you do. But let's go ahead and pull up the stock chart and let's take a closer look at everything that's going on. Okay, so first of all, let's not kid ourselves into thinking that the stock is finally cheap. It's still very expensive. Over the past 5 years, the stock is still up a massive 1,670%, with much of those gains really coming over the past year, where the stock has skyrocketed from a 52-week low of $70 all the way up to $900 a share. Since then, though, the stock has dipped back down to that $600 range, leaving it down around 25% from those highs. And there's a couple reasons for that. For one, the stock was already super high, very obvious. If we take a look at their valuation, their forward P ratio is still over 160 even after the recent pullback. And despite being a fairly young company with very little profits, their market cap has already ballooned to about $650 billion. To give you some context, that's more than Toyota, GM, Honda, and Ford's market caps all put together. That's pretty crazy considering Tesla sells around 500,000 vehicles a year compared to Toyota, who sells around 10 million by comparison. Now, when you look at the overall market, the tech-heavy NASDAQ had been dropping recently too. They're currently down about 7% in the last couple weeks, so it does make perfect sense that Tesla would get dragged down more than most because of that super rich valuation. On top of that, Tesla has also been having some more company-specific issues recently, like their factory in California temporarily shutting down Model 3 production for a couple weeks, which is not really a huge deal in my opinion, since they do have China pumping out Model 3s now too, but it is still technically the factory that builds the most Model 3s, which is their best-selling vehicle, so it's still bad news for them. But I don't really think it warrants any kind of big drop in the stock. Really, the biggest issue does seem to be that high valuation, but with the dip, I don't seem to be the only one that feels this was a good buying opportunity. One of Tesla's big investors is ARK Invest, led by Cathie Wood, and she went ahead and bought another $170 million worth of stock during this sell-off. As for me, I am buying more of this stock as it continues to drop, and my reasoning is very simple. I understand that the valuation is very high, and that is scary because if they don't meet certain goals, then the stock can get punished because of that a lot easier than maybe other stocks. Also, when there's a market sell-off, stocks like these can drop a bit heavier than most other stocks because just so many people are invested in it. It's such a popular stock, so it is a little more susceptible to panic selling, and that is always going to be a concern. But looking at this long term, I think it's very reasonable to expect Tesla to not only return to their previous highs, but even surpass that in the future. And I'm going to give you some very strong arguments to support that. For one, I think we all know by now that electric vehicles are the future. According to Bloomberg's EV Outlook 2020 report, electric vehicle sales will soar from 1.7 million units in 2020 to 8.5 million in 2025, a massive 26 million in 2030, and then a monstrous 54 million by 2040. In terms of market share, what this means is that EVs made up just 2.7% of all vehicle sales in 2020, but they'll quickly overtake traditional gas vehicles over the coming years with market share of 10% in 2025, 28% in 2030, and then a dominant 58% by 2024. And there's several reasons for this, like for example, the falling prices of lithium batteries that dropped by a massive 87% from 2010 to 2019. So as the technologies improve with new chemistries, manufacturing techniques, simplified pack designs, EVs should just become more widely available, cheaper to the general public at more reasonable prices, which we'll actually talk more about with Tesla in just a second. But probably the biggest reason why EVs will take over is simply due to new or expanded government policies that support EVs over gas vehicles. In fact, there's already 13 countries that have fully committed to banning the sale of internal combustion vehicles. And to give you some more direct examples of this, here in the United States, where Democrats have majority control of the government, we know that many of these policies are definitely coming. And hey, this isn't a political channel, so you guys have to decide for yourselves whether you like a certain policy or not. I'm not here to say whether they're good or bad. I just want to outline some of the things that I think are likely to happen that I think will help EV companies like Tesla. For example, we know that Biden is already looking to increase fuel efficiency regulations on automobiles that obviously help electric vehicles and hurt gas ones. He's also talked about implementing another cash for clunkers program to convince people to trade in their gas cars and then purchase electric ones. There's even talk of him expanding the tax credit threshold that Tesla had already surpassed. That's kind of a big deal too. And perhaps the biggest policy changes that will benefit EVs will have to do with infrastructure, since we know that one of the biggest hurdles that EVs face is not having enough charging stations. Currently, there are less than 30,000 public charging stations compared to more than 136,000 gas stations, according to CNBC. Biden's plan, though, calls for increased spending of hundreds of billions of dollars to invest in clean energy, battery technologies, and electric vehicles, including a plan to add 500,000 new charging outlets over the next 10 years. So in many ways, and especially in the areas where they're just gonna like outright ban the sale of gas vehicles, I don't think consumers even really have a choice. They're basically forced into buying electric vehicles. And whether that's a good thing or a bad thing, it's obviously going to boost the market. So where does Tesla fit into all of this? And why do I think that they stand to be maybe the biggest beneficiary of all of it? Well, for starters, Tesla is way ahead of the competition, and it hasn't even really been close for quite some time. While internal combustion manufacturers have been focusing solely on saving the sales of their gas vehicles that have been either in either flatlined or even declining, Tesla was going 100% all in on electric vehicles and battery design and even autonomous driving technologies, which other companies couldn't even really do because it would cannibalize their own gas sales, which are actually profitable. Their internal combustion vehicles are actually profitable. They don't sell electric vehicles for a profit, at least not yet. And it's going to take some time until they can catch up to something like Tesla and start selling them for a profit because they're just so far behind. And that's the reason why they waited so long, because they didn't want to shift from selling profitable vehicles to selling non-profitable vehicles. But they should have done it a long time ago. They should have just ripped the band-aid off. They are finally now investing heavily into electric vehicles. But I get the feeling that it's a little too late in terms of Tesla is already the dominant leader. They're way ahead of the pack, and I think they're going to continue to dominate the market because they already have such a big head start. In the United States, Tesla holds a massive market share of nearly 80%. No one even comes close to that. And if you think that's impressive, Tesla actually owns 4 of the top 5 best-selling EVs, with the Model 3 in first place, the Model Y in second place, which I actually think will be number 1 in the future because crossover SUVs are very popular. But then even the much older like S and X, they're still dominating the market despite their dramatically higher price tags than much of the competition. But perhaps the craziest thing about Tesla is that despite their already dominant position in the EV market, they still have a ton of room left to keep growing, given that the market itself is still in its infancy, as I showed you earlier. In fact, Tesla's global market share, when also including gas vehicles, is only less than 1%. And I know what you're thinking, gas vehicles have the advantage on price, and that's certainly true, But we know that Tesla is trying to address this issue by releasing cheaper vehicles over time. In fact, they've already confirmed a new $25,000 vehicle, and multiple reports have come out suggesting that it could even be released as early as next year. By the way, that vehicle is being built in China, which not only helps them dramatically lower their costs, but it also makes it easier for them to target that market, which, oh, by the way, happens to also be the largest EV market in the entire world. But it doesn't just stop there. Tesla's also trying to expand into other segments as well, like the popular truck segment with the Cybertruck, which I actually pre-ordered myself because I think it looks dope. The design really grew on me. I don't care what people think. But they're also going into the gigantic freight market with the Semi, which I think is one of the most slept on areas for growth for them as well. And they've even got the new Roadster, which I think can easily beat out any of the competition at the high-end sports car level. I mean, the thing is even expected to be able to hover, which I think is just insane to think about. But then there's even more kind of random areas for growth, like a partnership with the Boring Company to use Teslas for underground tunnel systems that could very well be the future of transportation. Keep in mind that the Boring Company is actually owned by Elon Musk too, so there's a huge incentive there to actually use Teslas over anything else. By the way, those Teslas will likely be fully autonomous, and that's yet another giant area for growth since Tesla is aiming to release a robotaxi service, which ARK Invest estimates should give the winning platforms a market cap of anywhere from around $2 trillion to as much as $12 trillion in just 10 years. Basically meaning that if Tesla was like the only robotaxi service out there, their market cap would be in that gigantic range in the trillions. Now, obviously Tesla will not be the only player, but if they can control the top spot or at least be heavily competitive, then their market cap would likely still see a very nice boost from it and possibly even be in like the $1 trillion range thanks to the huge boost in cash flows that'll bring. And none of this is even mentioning the fact that Tesla is a huge player in electric generation and battery storage technologies as well, which I actually think battery storage will be the answer to many of the unreliable problems of renewable energies. Anyway, much of these things are already leading to very impressive growth rates for Tesla at a time when most other automakers are severely struggling to grow. This year alone, Tesla is expected to grow their sales by over 50%, and they've stated in their last earnings report that they expect to grow deliveries by at least 50% every single year going forward. Again, Tesla is not a cheap stock, and it's very expensive, but I'm starting to get the feeling that it's never going to be a cheap stock. So buying it on larger dips, in this case a 25% drop, does seem very reasonable to me. And because I think they're going to have such a bright future over the long term, it's a very easy stock for me to keep nibbling on, because even if it continues to drop, I can just buy more and just hold it long enough for it to recover, which I think will absolutely happen because they have such a bright future. So it's just one of those stocks that is very easy for me to buy on big dips, on big drops, and even if it continues to fall. But that's just my opinion, guys. I'd love to hear what you guys think down below. Again, do your own research, make your own decisions. But I hope you enjoyed the video. I hope I made some compelling arguments, and I hope you appreciated that. Hit the like button if you did, and subscribe if you haven't already. But I'll catch you guys in the next video. Thanks again. Take care. Bye-bye.